Stop whatever you're doing right now and listen to me very carefully because the moment we have been waiting for, the moment the naysayers said would never happen, has finally arrived. We are no longer talking about predictions. We are no longer talking about what might happen in the future. We are talking about what is happening on the charts right now. The resistance has broken, the ceiling has shattered, and the financial world as we know it has just crossed a Rubicon from which there is no return. If you have been sitting on the sidelines waiting for a sign, this is it. If you have been waiting for a pullback to get in, you might be waiting for a train that has already left the station. The price of gold and silver has not just nudged higher, it has smashed through the most critical technical levels in history with a violence and conviction that tells us one thing clearly. The era of cheap precious metals is over. We need to have a serious conversation about what this breakout means because most people are going to misinterpret it. The mainstream media, if they cover it at all, will call it a bubble. They will call it a fluke. They will tell you to take your profits and run back to the safety of the stock market. Listening to that advice right now would be the single most expensive mistake of your financial life. To understand why, we have to look at the anatomy of this move. This wasn't a standard market fluctuation. This wasn't a double top. A double top is a bearish signal where the price hits a previous high, runs out of energy, and collapses because there are no buyers left. That is what the bears were screaming about all week. They were looking at the charts from years ago and saying history would repeat itself, that the price would hit the ceiling and crash. They were wrong. They were dead wrong. What we saw instead was a consolidation, a gathering of strength, and then a decisive battering ram through the resistance. The price didn't recoil. It accepted the new level. It got comfortable. And then it kept climbing. This tells us that there is a voracious appetite for physical metal underneath the surface that is absorbing every single ounce of selling pressure. The line of least resistance is no longer down. It is no longer sideways. The line of least resistance is up and it is pointing vertically. You might be asking yourself why this is happening now. Why, after all this time, are we seeing this explosion? It is tempting to look at 2011, the last time gold hit a major peak, and feel afraid. In 2011, gold hit $1,900 and then spent years in a brutal bear market. People who bought the top in 2011 felt the pain for a decade. I understand that fear. It is real. But you cannot drive a car by staring into the rearview mirror, and you cannot navigate the financial markets of 2026 by looking at the charts of 2011. The world is a fundamentally different place today. In 2011, the United States national debt was around $14 trillion. It seemed like a lot back then. Today, we are staring at $35 trillion and climbing by $1 trillion every few months. The mathematical landscape has completely shifted. In 2011, real interest rates were positive or close to it. Today, we are drowning in a sea of negative real rates where holding cash is a guaranteed way to lose purchasing power. In 2011, central banks around the world were net sellers of gold. They were dumping their reserves to suppress the price. Today, central banks are the voracious whales. They are buying gold at the fastest pace in over 50 years. China, Russia, India, Poland, Singapore, they are backing up the truck. They are not selling, they are hoarding. So when you compare this price action to 2011, you are comparing apples to hand grenades. The setup is entirely different. The fuel for this fire is infinitely more combustible. We are entering the acceleration phase. This is the part of the market cycle where the psychology shifts from caution to realization. For years, gold and silver investors have been the contrarians. We were the ones laughed at dinner parties. We were the doom and gloomers. But now, the narrative is flipping. The average person is starting to look at their grocery bill, look at their insurance premiums, look at the shrinking size of products on the shelf, and they are realizing that the money in their pocket is broken. They are realizing that the inflation is cooling narrative was a lie designed to keep them docile. And when that realization hits the mainstream, when the herd decides it needs insurance, the door to the gold market is simply too small to let everyone in. That is what creates the vertical price move. It is a rush for safety in a burning theater with a single exit. But there is a danger lurking here that is far more terrifying than the price going up. It is a danger that almost nobody talks about until it is too late. We focus so much on the price of gold and silver. We obsess over the spot price on our screens. But the real risk in the coming months and years is not that you will have to pay more for the metal. The real risk is that you won't be able to get it at all. We are moving into an era of friction. For the last 40 years, we have lived in a world of easy access. If you wanted to buy gold, you walked into a shop or clicked a button online and it showed up. That era is ending. We are already seeing the signs of institutional friction. Have you tried to withdraw a large amount of cash from your bank lately? Have you noticed the questions? Have you noticed the delays? The system is tightening. They are building walls around your capital. Imagine a scenario where the price of gold hits $3,000 or $4,000. You decide finally that it is time to buy. You transfer money to your bullion dealer, but your bank flags the transaction. They freeze your account for security verification. They ask you for invoices. They ask you why you are buying such a risky asset. They delay the wire for 48 hours. In those 48 hours, the price jumps another $200. Or worse, the bullion dealer runs out of stock. This is not a conspiracy theory. This is the reality of a financial system that is desperate to keep you trapped in fiat currency. The friction is the weapon. They don't have to ban gold to stop you from owning it. They just have to make it incredibly difficult, expensive, and bureaucratic to buy it. They can raise the taxes. They can increase the premiums. They can implement digital controls through central bank digital currencies that simply decline transactions for non-approved assets. This is why I am telling you that the window is closing. Not the window to make a profit, but the window of access. We are transitioning from a market where the buyer has the power to a market where the seller holds all the cards. Right now, you can still trade your paper dollars for real metal with relative ease. That is a privilege, not a right. And privileges can be revoked. The breakout we just saw in the charts is the market telling you that the big money is securing its position before the friction becomes insurmountable. They are getting their metal out of the system while the gates are still open. If you are sitting there waiting for a pullback, waiting for a better price, you are playing a game of Russian roulette with your financial future. You are betting that the system will remain open and functioning long enough for you to time the market perfectly. That is a fool's bet. We need to talk about the currency illusion because this is the mental trap that keeps people poor. You look at the chart and you see gold going up. You think, wow, gold is getting expensive. You are looking at it upside down. Gold is not going up. Gold is the constant. Gold is the anchor. It is the rock in the river. The rock doesn't move. The water moves around it. The dollar is the water and the current is getting faster. The dollar is going down. When you see gold hitting new all-time highs, you are simply witnessing the real-time devaluation of your labor. You are seeing the scorecard of the Federal Reserve's failure. Look at gold in other currencies. Look at it in the Japanese yen. Look at it in the Turkish lira. Look at it in the euro. In many of these currencies, gold broke out months or years ago. The US dollar is just the last domino to fall. It is catching up to the reality that the rest of the world already knows. The strong dollar was a temporary mirage caused by raising interest rates faster than everyone else. But now that game is over. The pivot is coming. The printing press is warming up, and the dollar is about to plunge into the abyss of dilution. So, when we say gold is heading to the mid-thousands or that silver is heading to triple digits, we are not making wild speculative guesses. We are simply doing the math on the devaluation of the currency. If they double the money supply to pay off the debt, the price of real assets must double to maintain equilibrium. It is basic economics. Silver, in particular, is coiled like a spring. Silver is the only commodity that is still significantly below its all-time high from 1980 and 2011. Think about that absurdity. Everything else, houses, stocks, bread, gas, is vastly more expensive than it was in 1980, but silver is cheaper. This is the greatest anomaly in the financial world. It is a beach ball held underwater by paper manipulation. But the industrial demand for silver is exploding. Solar panels, electric vehicles, AI servers, military missiles, they all consume silver. and they consume it in a way that it is lost forever. It ends up in landfills. We are burning through the world's silver inventory at a time when mine supply is falling. This creates a supply squeeze that will make the GameStop short squeeze look like a child's tea party. When the industrial giants Tesla, Samsung, Apple realize they can't get the silver they need to build their products, they will panic. They will bypass the paper markets and go straight to the mines. And the price will not just rise, it will reprice. Triple-digit silver is not a fantasy. It is a mathematical inevitability based on the supply crunch. But let's go back to the psychology of the investor because this is where the battle is won or lost. There are two types of people watching this unfold. There are the spectators and there are the builders. The spectator watches the price every day. They get an emotional high when it goes up and a pit in their stomach when it goes down. They are paralyzed by analysis paralysis. They read every article, watch every video, but they never pull the trigger. They are waiting for the perfect moment. They are worried about buying the top. They are worried about what their brother-in-law will think. The spectator will watch this entire bull market pass them by, and at the very end, when the price is in the stratosphere and the mania is at its peak, they will finally buy out of FOMO, and they will lose everything. Don't be a spectator. The builder is different. The builder has a plan. The builder understands the fundamental thesis. The debt is unpayable, the currency is dying, and real assets are the only lifeboat. The builder doesn't care about the daily price action. They don't care if gold is down $10 today or up $50 tomorrow. They care about ounces. Their goal is to accumulate a specific amount of weight. They dollar cost average. They buy a little bit every week, every month, regardless of the noise. They treat it like a savings account, not a lottery ticket. The builder understands that volatility is the price you pay for performance. They welcome the dips because it means they can buy more cheap ounces. They are building a fortress of wealth that is independent of the banking system, independent of the government, and independent of the internet. When the digital lights go out or when the bank holiday is declared, the builder is the one who has options. The spectator has nothing but regrets. This breakout is the signal to become a builder if you aren't one already. The time for speculation is over. The time for accumulation is now. We are seeing the separation of the haves and the have-nots, but not in the way the media tells you. It is not about income. It is about asset allocation. It is about who holds the paper and who holds the rock. The paper holders are going to be wiped out. It is a harsh truth, but we have to face it. The pension funds are holding paper. The insurance companies are holding paper. The average 401k is holding paper. When the reset comes, and it is coming, that paper will burn. The purchasing power will evaporate. The people who hold gold and silver will be the ones who carry wealth through the transition. It has happened in Rome. It has happened in Weimar, Germany. It has happened in Venezuela. It has happened in Zimbabwe. It is the cycle of history. Empires rise, they overspend, they debase their currency, and they collapse. Gold is the bridge that connects the collapse of the old empire to the rise of the new one. You want to be on that bridge. Let's dig deeper into the concept of access. I want you to visualize what the final stage of this bull market looks like. It doesn't look like a line at the coin shop. It looks like an out-of-stock sign on the website. It looks like a 6-month wait list for delivery. It looks like premiums that are 100% over spot. When the masses finally wake up, there simply isn't enough metal to go around. All the gold ever mined in human history fits into a cube that is roughly 22 meters on each side. That's it. It fits in 2 Olympic swimming pools. Now try to divide that cube among 8 billion people and hundreds of trillions of dollars of paper wealth trying to find a home. It is impossible. The price has to go to infinity to balance the equation. But before price balances it, availability rations it. You will see a bifurcation where the spot price might be $5,000, but you cannot buy an ounce for less than $10,000. And even then, you have to know someone. We are seeing early signs of this now. Mint production is strained. The supply chain is fragile. One geopolitical event, one major mine strike, one new war, and the supply chain snaps. This is why I urge you to act before the friction becomes a wall. The recent price action is telling us that the smart money is front-running this friction. They are buying now because they know that later, buying might be impossible. They are not worried about saving a few dollars an ounce. They are worried about securing the asset. When you understand this, the fear of buying the top disappears. There is no top in a currency collapse. What is the top for the price of bread in Venezuela? Millions of bolivars. Did the bread get better? No. The currency died. We are looking at gold heading to prices that sound like science fiction today. Not because gold is magical, but because the dollar is mathematically doomed. We also need to address the everything bubble. For the last decade, investors have been trained to believe that stocks always go up and real estate never crashes. This conditioning is dangerous. We are in an everything bubble fueled by cheap debt. But as interest rates stay higher for longer to fight inflation, that bubble is deflating. We are seeing cracks in commercial real estate. We are seeing cracks in the banking sector. We are seeing cracks in the consumer. When the stock market bubble bursts, where does that capital go? It looks for safety, it looks for liquidity. Historically, when the risk-on trade dies, the risk-off trade flies. Gold is the ultimate risk-off asset. It has no counterparty risk. It doesn't rely on a CEO to make a profit. It doesn't rely on a tenant to pay rent. It just is. As the illusion of paper wealth shatters, the gravity of gold will pull trillions of dollars into its orbit. The breakout we just saw is the first wave of this capital migration. The tsunami is still out at sea. Do not let the daily noise distract you. The financial media is designed to keep you confused. They want you trading in and out, generating commissions, paying taxes, and staying inside the system. They will tell you gold is a pet rock. They will tell you it yields nothing. They ignore the fact that gold has outperformed the S&P 500 in this century. They ignore the fact that it is the only asset that has preserved purchasing power over millennia. This is a psychological war. They want you docile. They want you holding the bag. By breaking out to new all-time highs, gold is piercing through the propaganda. It is shouting the truth. And the truth is that the emperor has no clothes. So what is the strategy? The strategy is aggressive patience. It sounds like a contradiction, but it is not. You must be aggressive in your accumulation now, while you can. But you must be patient in your holding. Do not buy gold to sell it next month for a profit. Buy gold to pass it down to your grandchildren. Buy gold to be your own central bank. Buy gold so that when the government says, turn in your cash, you have a form of wealth that they cannot cancel. This is about sovereignty. It is about freedom. The buy before it's too late message is not marketing hype. It is a plea to look at the mechanics of the market. The liquidity is drying up. The friction is increasing. The price is accelerating. The train is leaving. I want you to think about the regret of the person in 2030 looking back at today. They will look at gold at $10,000 and say, I remember when it broke out. I remember when it was affordable. Why didn't I buy more? Why did I listen to the TV pundits? Why was I scared of a 2011 repeat? Do not be that person. History rarely gives us such a clear signal. Usually the markets are murky and confusing, but right now the signal is crystal clear. The breakout is confirmed. The fundamentals are aligned. The macro backdrop is perfect. The only variable left is you. Will you take action? Will you step out of the comfort zone of the herd? The path forward is going to be volatile. There will be days where they smash the price down to scare you. There will be days where the volatility makes you nauseous. That is the price of admission. If it were easy, everyone would be rich. You have to have the conviction to hold through the storms. You have to understand what you own. You are not owning a ticker symbol. You are owning the only form of money that is not someone else's liability. You are owning a slice of the earth's crust that has been valued by kings and queens for 5,000 years. You are owning insurance against human stupidity. And right now, the supply of human stupidity is at an all-time high. This week changed everything. It wasn't just another green candle on a chart. It was a declaration of independence by the gold market. It declared that it is no longer afraid of the Federal Reserve. It is no longer afraid of the short sellers. It is marching to its own drumbeat now. The drumbeat of scarcity. The drumbeat of truth. The drumbeat of a new financial order. You can plug your ears and pretend you don't hear it. You can stay in the matrix of paper assets, but you cannot say you weren't warned. The charts have spoken, the breakout is real, the acceleration is here. Go to your local coin shop, go to your online dealer, get some metal in your hand, feel the weight of it. That weight is the weight of history. It is the weight of reality. In a world of digital illusions and paper promises, reality is the most valuable asset you can own. Do not wait for the all-clear signal from the media. By the time they give it, the vault doors will be shut. Be a builder. Be a sovereign. Be prepared. The train is moving. Jump on board now, or watch it disappear into the horizon of higher prices and unobtainable access. This is your wake-up call. Don't hit snooze.